This is Margin Machine, where we follow the money behind AI. A company that is barely 4 months out of stealth, with 0 customers, 0 revenue, and not a single shipped product, just got valued at $4.65 billion. Investors wired them $650 million, one of the largest Series A rounds ever recorded, for what is, on paper, a group of very smart people and a mission statement. And here's the strange part, by the logic of today's AI market, the investors might have gotten a discount. In the next few minutes, we're breaking down who these people are, why NVIDIA and Google's venture arm fought to get into this deal, and the hidden math that explains why a single AI researcher can now command more money than most companies are worth. Because this deal isn't really about one startup. It's about a quiet repricing of human beings that's happening across the entire AI industry, and the last number in this video is the most absurd one you'll hear all week. The company is called Recursive Superintelligence. It was founded in 2025 and emerged from stealth in May 2026 with a $650 million raise led by GV, that's Google's venture arm, and Greycroft, with NVIDIA and AMD Ventures both writing checks into the same round. Think about that for a second, the two biggest rivals in AI chips, investing in the same startup. So what did they buy? Not a product. A roster. The lab is led by Richard Socher, the former chief scientist of Salesforce and founder of the AI search engine U.com, around him, Tim Rocktaschel, a professor at University College London and former principal scientist at Google DeepMind. Jeff Clune, one of the most cited researchers in open-ended learning. Josh Tobin from OpenAI. Alexei Dosovitsky, a co-author of the Vision Transformer, a paper that underpins half of modern computer vision. And Yuandong Tian, formerly a research director at Meta's Fair Lab. 8 co-founders, pulled from OpenAI, DeepMind, Meta, and Salesforce. Their stated mission sounds like science fiction: build AI systems that discover knowledge on their own, continuously optimize themselves, and evolve in an open-ended loop, like biological evolution, minus the millions of years of waiting. Now, a $4.65 billion valuation for a real company is normal. But here's the part nobody mentions: divide that number by headcount. Recursive is a small research operation, even if you assume around 50 people across San Francisco and London, that's roughly $90 million of valuation per person. Per person. A few weeks ago on this channel, we talked about 11 labs generating over $800,000 of revenue per employee, and that was considered elite. Recursive generates $0 per employee, and the market values each of them like a mid-sized profitable business. That is not a software valuation. That's not even a startup valuation in any traditional sense. It's closer to how you'd price a sports franchise. The value isn't in the stadium or the merchandise, it's in a tiny roster of players that almost no one on earth can replace. And once you see this deal that way, a lot of confusing headlines from the past year suddenly snap into focus. Because Recursive didn't invent this pricing. Big Tech did. Over the last 18 months, the AI talent war has gone from aggressive to openly surreal. Meta reportedly offered pay packages worth up to $300 million over 4 years to lure senior researchers, with liquid compensation structured so people didn't have to wait years for stock to vest. Headlines screamed about $100 million signing bonuses. Some of the researchers involved pushed back and called those specific numbers exaggerated, but Meta itself confirmed that its largest multi-year packages for a handful of senior leaders reached into the hundreds of millions. It reportedly paid former Apple AI leader Ruoming Pang a package exceeding $200 million. And in the most extreme case reported so far, Mark Zuckerberg allegedly offered Andrew Tullock, a co-founder of Thinking Machines Lab, a package worth as much as $1.5 billion over 6 years. He said no. Let that sink in. An individual researcher turned down more money than most startups will ever be worth. Meanwhile, the median total compensation at OpenAI is estimated around $870,000 a year, and U.S. job postings requiring AI skills grew roughly 144% year over year, about 20 times faster than the overall job market. So why would disciplined, professional investors hand $650 million to a company with no product? 3 reasons, and none of them are crazy. First, the power law. Venture capital doesn't need Recursive to probably succeed. It needs a small chance of an outcome so large that it pays for every failed bet in the portfolio. If self-improving AI works even partially, the company that owns it isn't worth billions, it's worth more than most countries' stock markets. A $650 million check is a call option on that future. Second, strategy. NVIDIA and AMD aren't just investing, they're securing a front-row seat with a lab that will burn enormous amounts of compute, almost certainly purchased from them. When a chip maker funds an AI lab, part of that money boomerangs straight back as GPU orders. It's an investment that partially pays for itself. Third, and this is the uncomfortable one, scarcity. There are maybe a few hundred researchers on the planet with a credible track record of pushing the frontier of AI itself. Chips can be manufactured. Data can be bought. That talent pool cannot be scaled on demand. And in any market, the scarcest input captures the most value. But let's be honest about the risk, because the history here is brutal. Pre-product research labs have a habit of burning astonishing amounts of money before the world finds out whether the thesis was right. Recursive plans a public launch in mid-2026, and until then, the money flows one direction, out, into salaries priced by the talent war we just described, and into compute at a scale that would bankrupt a normal company. If self-improving AI turns out to be 5 years further away than the pitch deck says, that $4.65 billion valuation isn't a floor. It's a memory. Investors know this, which is exactly why the same names spread their bets across multiple frontier labs at once. They're not picking a winner. They're buying lottery tickets in every lottery that exists. For the rest of us, the takeaway is simpler and more practical. The market has now officially decided that the scarcest, most valuable asset in artificial intelligence isn't the model, the chips, or the data. It's a few hundred human brains. And everything downstream, salaries, valuations, acquisitions, is being repriced around that single fact. So here's the full picture. A 4-month-old company with no product is worth $4.65 billion, not because of what it built, but because of who walked through the door on day one. Big tech set the price of elite AI researchers with $300 million packages, venture capital imported that pricing into startup valuations, and chipmakers are funding the whole loop because the money comes back to them in GPU orders. It's a perfectly circular machine, as long as the belief holds. If you like following the actual money behind the AI headlines, subscribe, because we do this every single day. But before you go, there's a thread we couldn't pull on today. NVIDIA didn't just show up in this deal, it has quietly appeared in almost every mega round we've covered this year, on both sides of the table, as seller and investor at once. If you want to know how one company ended up collecting money from nearly every check written in AI, and why some analysts say it can't afford to stop, click the video on your screen right now.